Today we're going to have a heart-to-heart, my biggest trading regrets over the last 30 years of trading. I've been doing this for a long time, so there's probably quite a lot of regrets in there, but there's a lot of good stuff as well, man. There's a lot of brilliant stuff in there. Hey, for those of you who don't know me, I'm Rob, and for those of you who do know me, guess what? I'm still Rob. It's Coffee with Rob, so we're going to have some coffee and we're going to get chatting. That's absolutely amazing. Amazing cup of coffee. I spent so many years knuckling down, sitting behind computers, looking at charts, and trying to figure my way through the systems. My biggest regret, to be fair, is not listening to the older traders, not listening to the guys that said, hey, Rob, if you're going to do this trading thing, listen to this advice. And I was like, you guys don't know what you're talking about. I know everything about stock markets. I know what I'm doing. Now, 30 years ago when I started trading, we used to draw lines with pencils. We didn't have computers. So when computers came along, I thought it was the best thing since sliced bread. And one of my biggest regrets is one of the older guys turned around to me and he said, do you know what? Take the money and invest it, because it's time in the market, not timing the market. And I thought, well, I need to make money today. I can't wait 30 years. Well, that 30 years has passed, hasn't it? And if only I'd put the money in right there and then when he said so, I would have had that much more. Those are one of my biggest regrets. Why didn't I listen? It took me years to get the aha moment. It took me years to go, oh, do you know what? That's what I should be doing, because that's going to make me the money. I mean, why did it take so long? So many years to get there. I was probably 10, 12, 13 years into my trading career before the aha moment started to strike that, hey, wait a minute, you should be stashing all that in the trades. The other massive regret is I didn't listen to the one guy turned around and said, if you were to take your trade now, where would you put your stop loss? And I'd be like, oh, I'll put my stop loss over there. You know, there's a good spot for the stop loss. And he would say, take your trade from there. I was like, don't be silly. That's where the trade's over. No, he was right on so many occasions. Like I say, my biggest regret was not listening to people that actually taught me how to do these things. One of my other major regrets was I spent so many years looking for new systems because just like you and just like the younger guys today, I started to believe that the market was objective. I started to believe that the charts make all the money. I started to believe that a system's going to make me all the money. And every time that I had a system that was working and then it would start to wave and it would start to not work, because that happens, I'd be thinking, I'll have to look for another system. First, you start tweaking that system and you start moving it around and playing around with it. And then you jump around and you go and look for someone else's system, and then you grab that system and you start working with that system. And then that one works for a while and it starts failing, and it's a vicious circle. And you keep going from system to system to system to system. And of course, the market throws all these indicators at you, all these wonderful indicators. And you think, oh, I can use that indicator, I can use that indicator. And they promise you it's going to win you fortunes, it's going to make you millions. And you try using that indicator. And it works a little bit to start out with. And then you realize, well, it's just another system. You see, the big problem out there is there's too many people or too many systems out there that are being sold to you or being put over to you. Maybe too many courses being put over to you, and they're trying to sell this to you. They're trying to get you to purchase into this absolute rubbish. So you buy all these indicators, you buy all these systems, you get involved in all these systems, and then none of them actually work. You see, the thing is, guys, the market's made up of human beings. And that's another big regret that I have, that I never realized that the market was made up of human beings. In the beginning, I did. In the beginning, I used to buy and sell on the telephone, and we didn't have computers, and I understood that I was dealing with human beings. But that all sort of went away with computers, and you start looking at charts, and you start seeing charts, and you start thinking the world is made up of charts, the world is made up of maths, the world is made up of all these strange things, when in fact it's not. It's made up of real people. It's not an easy thing to get around. It's not an easy thing to figure out. And I regret the fact that for many years, I thought I was trading against bots. I thought my stop losses were getting hunted out. I thought somebody was watching me in the market. You know that feeling you get when you're trading and you feel like almost embarrassed if you make a loss because somebody might be watching you when nobody actually cares. Nobody gives a damn what you're doing when you're sitting behind that screen trading. All you're doing is looking for liquidity, buying or selling a trade. You're not doing anything else. There's nothing else that you could be doing. So you're looking for someone else's liquidity so that you can take a trade. So once you understand that there's human beings in the market, then suddenly you understand that the market's 50-50. And I regret not knowing that as well. I used to think the market was in my favor. Even though they told me that 70% of traders lose, well, I must be part of the 30% because I'm good at this, right? Sound familiar? Even though you know that 70% of traders lose, you think you're always going to win. You don't realize that the market is 50-50 because 100% of traders believe that they're going to win. Everybody thinks they're going to win. There isn't anyone out there that doesn't think they're going to win. And that in itself makes the market a 50-50 game because only half of you can win and the other half have got to lose because some of you are buyers and some of you are sellers. If everybody was right, if the market was controlled by maths, if the market was controlled by bots, and if the market was controlled by AI, and they were always right, where do you think the market would come out? Do you think it would make a profit? No, of course not. It'll come out at a big fat zero. Where else could it come out? And what other area could it actually come out? It can only come out at a big fat zero. There's nowhere else that it can come out because everyone's right. It's the same as if everyone's wrong. It's going to come out at zero. If everyone's right, it's going to come out at zero. There's no other way. That's another regret that I have. I didn't realize this. I didn't understand this. One of the biggest ones was that I've traded on every single system known to mankind for the first 10-15 years. I traded moving averages. I traded Ichimoku. I traded MACD. I traded RSI. I traded, you name it, Fibonacci. I traded everything. I did everything before I got to the aha moment that price action is the way to trade. It's the only way to actually trade. So what I'm going to do now, I'm going to take you to the charts and I'm going to show you the system, the price action system that's going to give you those high probability trades that'll take you a little bit further in your trading career. But just remember, the system is not going to make you money. The market's 50-50. The system's just going to give you that high probability trade. Nothing else, nothing more. After the charts, we'll talk a little bit about following your stop loss up and how you can work it in the strategy. Let's have a look at the charts and then we'll get to that. Now, let's be honest, I don't really have any regrets trading, but there'll be a few. And you'll have heard all the moaning and whining before we got to the charts. Don't forget, most traders lose money. And if you're unsure, you probably shouldn't be trading. Let's go and have a look at what price action system you can use to make yourself a little bit of money. You got to love these charts. These charts are flying around all over the place. But what I want to try and do is give you an idea of how you can make some money in the markets. Now, it's really easy. I'm going to take the most difficult one of the lot, take all of these levels out. I'm going to show you how to do it. There's three ways that we trade. We trade with the trend. We trade in a range, which is straight along between a high and a low. And we counter trade everything. We trade against the counter. Shall we use this? What the hell? Let's use this. We trade on the H4. We're trading on a 4-hour chart. So what we do is we take it to the day chart. First is we take it to a day chart. Now, the first thing you should do is just look at the chart and see what you got. Now, you look at this and it's gone up. It's come all the way down, and then it's just sort of settled here. It's going along in a straight line. This looks to me like it's in a range. That was a trend. Trended down, went up, broke the trend, went along. Now, how can we tell that? Well, what I do is I put it on a line chart, and the reason I put it on a line chart, because it's closing prices. With the candles, what happens with the candles? You get these spikes. And what do those spikes tell you? Someone stood up, said something, and it just forced the market in that direction. Then all the sellers or all the buyers came back into the market. And spikes are not levels. The levels are on the closing prices. But how do you pick a level? What you're looking for in general in the market is liquidity. And you're going to find that in resistance areas, areas where the price gets to, comes back, price gets to, comes back. Why do you think the price comes back from this level every time? Because there's money there, because there's orders lying there. That makes this an area of importance. It's a very important area. Every time the price gets there, it comes out, comes there, it's taking money and coming out of that area. And you're going to get a support area at the bottom that's doing exactly the same thing. Now you could choose this one right at the bottom here, and that's probably the correct level, but this one seems to be more prominent. So I'm actually going to choose, well, what happened there? Okay, guys, not to worry. That happens sometimes. You know, these things are finicky sometimes. They don't like. Okay, so we're going to take that level right there. That is now your area of support. I've avoided this. This is just like a breakthrough. This is just like a breakthrough. It's not that great. So you're looking for an area that's really important, where there's lots of touches, where there's lots of areas where it keeps getting there, keeps getting there, keeps getting there, keeps getting there. So you know there's money in that area. That area is important. So like I said to you, there's three ways that we trade. The first way would have been with a trend. So you would have been selling, 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 selling in this area here. But then you would have wanted to buy. And at what point would you have wanted to buy? You would have had a little trend line drawn in here. That little trend line would have just been there saying to you, do you know what? When it breaks through that trend line, it becomes a buy. Look at that, came up, came back, came up, broke through, and that was a buy. Now, if I take this back to the candles, you can see it clearly. There was your trend all the way down selling, and when it broke back through that little resistance line over there, that was your signal to buy again. Because there was, remember, this support wasn't there at the time. There was nothing over here. So you had no signal to tell you when to buy. They're breaking through here. Now you've got the signal. It broke through there. It tried to come back and retest, went back up, broke through, and now it's staying in this range. Are you trading this in a range? And it's trading in a range between 188 and 200, whatever this is, Great British Pound, Japanese yen. Sorry, I didn't even look at what it is. But now you're not trading on a day, you're trading on a 4 hour. So you want to take this back to the 4 hour. So I hope you understand that. You draw a little trend resistance in when it's trending, and you wait for it to break to the other side, and then you can go the other way. That's the counter trade. The trading with is basically you follow it down and you keep trading short on that because it's trading on the trend going to the short side. What we do now, we take this back to a 4 hour chart, and you would have seen that one that I took out earlier is back. And now we've got the resistance in as well. So now you know, because you take this off the day chart, you know that it trades into this level at the bottom, and it goes up, and it trades into that level at the top, and it comes down. So where's your risk to reward? This is a buy, because you're going to buy this with a view to it going back up there. And it's too close to sell it because it's right at the bottom here. What you can do is on the lower time frame is look for areas where it's going to tell you it's changed direction. So for example, if this goes short, you want to know, so you can just put a little line in there just to tell you if it's going the other way. Because if this breaks past that and starts going down, then it's actually going short. It's going the other way. So you want to make sure that it continues on that trajectory to the upside. You can look for these top levels here. You see there's a pincer top there, there's a pincer top there, pincer top. So there is a bit of resistance on the 4 hour at this level. So you want it to break through that level. So what you can do is you can maybe take a horizontal line, sort of draw it in there and say, oh, you know, that's actually a bit of a level. It needs to break through that level because it is trading in a mini range in this area here. And you kind of want it to break out of that mini range, and then it's going to the upside. It's going the other way. That's all you're looking for. Makes it really easy. See, price action, really simple. You don't want too many lines on here. You don't want MACDs, stochastics, and volumes and all those types of things clogging up your chart. You want it open like this. You want it easy to see because you can see what's going on here. You can see this is in a range. You can see as we stand right now, if I take this trade long right now, I might get stopped right here at 192.6 because of this mini range. I want it to break through that mini range. Once it's through that, I can see I've got all that upside all the way to the main resistance. And that's as easy as trading gets. It doesn't get easier than that. Go and check out my strategy after this on how you can take your profits. Go and learn how you can take your profits. The best way to take your profits after the charts here. I'm going to tell you how to do it. Go and check it out. Now you've been to the charts. Now you've seen what kind of high probability system you want to use. The one that I regret I didn't start using for at least maybe 12 to 15 years. I can't give you exact timing. It took me a long time to find it out. It took me a long time to figure out that that's the only way to trade. Take all the indicators off and just use price action. But here's the thing. The strategy that I always use at the end of this video, you can just go to one of my last videos and you can check out the strategy. But I want to talk to you about how you follow your stop loss up. How do you make your take your profits? What a lot of people do is the minute they're going to profit, let's say you've got a target of $2,000 and you're $100 in profit and your finger's already on that button and you're like, I'm going to take this profit, I'll take this profit now, and you want to click out and you want to get out of that trade and you want to get out now. Don't do that. You've got to learn to sit on your hands. You've got to learn patience. Fear is your biggest enemy. I regret not knowing that in the early years as well. I didn't understand that fear and FOMO and patience was so important in trading. It's so important, guys. It's one of the most important things. If you can get your mind around that, you'll be so much better off. But how do you get around that? How do you work around that scenario? You've got a $2,000 profit. You want to make that money. You want to take the profit. You see green, you want to take that green. Well, the only way to do it, guys, is to take your stop loss, move it up to break even, once you're in a reasonable profit. Once you're in a profit where you're happy that you're making a reasonable profit and there's enough distance, take that stop loss, move it up and put a trailing stop on it. Let it trail your price up. Let it go up with it. Keep moving it up behind the move up. And then take your stop loss and move it right up behind the price when it gets to your take profit level. Let's say it reaches the $2,000 target. Take your stop loss, move it right up there. If it comes back and takes it out, you'll be happy because you've made all that profit. And if it goes further, you'll be even happier because you'll make more profit than you expected to in the first place. And that's as simple as it gets. There is more complicated things like while the stop loss is moving up, you can pick a point and you can add to the trade and move the stop loss down a bit and double up on the trade, or add 25% and make the trade a bit better because the trade's going so well, because when you're in a profit, things are going good. That's what you do with investments. And if you can do it with trading, why not? But it is very difficult to add to trades or dollar cost average up on trades. Never dollar cost average down, guys, because you are going to lose. But if you can dollar cost average up, that's great, but that takes a lot of learning. It's going to take a long time for you to get there. So in the beginning, just learn to take your stop loss, move it up, and just follow your price up. Follow it up behind. Don't take profits. Never take profits. Let the profits take themselves. If the price decides to come back and go away, and it takes you out at break even, or it takes you out for $100 profit, takes you out for $200 profit, so be it. You made a profit, you walk away, or the trade cost you nothing. If you were scalping, you would have done that anyway, so it won't make much difference. You'll end up with a whole mishmash of trades like that. But what's important is you're aiming for the big one, and the best way to aim for the big one is to just keep your stop loss up there, and you won't lose any money if the trade goes negative, and you'll be kind of in a positive. Hope that helps you guys. Go and watch my last videos if you want to know the strategy to get to that, and I'll show you exactly how to trade with a business plan that's going to make you money. Guys, thanks for watching. Till the next one. Cheers, ciao, and bye.